Hey everybody, this is Dr. Tom Carr, aka Dr. Stoxx. Welcome to another edition of Market Talks with Dr. Stoxx. And wanted to do two things with you today. First, I want to take a quick look at the S&P 500. It's been several weeks now since we've had a market update. So we're going to give that to you, just a very quick look at where we think the general market's going to be heading over the next few weeks. And then I want to talk to you about some new research that I have developed in the area of trading momentum stocks. Real exciting stuff I want to share with you. First, let's take a look at the S&P 500, which I have represented here by the SPY, the SPDR ETF, which tracks the S&P 500. And if we scroll out a bit here, we can see that we're still in this dominant uptrend, which we've been in for a number of months now. In fact, we're in a 5-year bull market toward the tail end of those 5 years. And the most recent activity, the last few months of activity in the S&P 500 has been very bullish. You can see it's got a nice consistent 3-point touch lower trend line, support line. And if we draw our horizontal line above that, we can see that we do have a nice, clean, very sustainable trend. It's moving up at about a 45-degree angle, which is a very sustainable degree of momentum. And the upper bar is being touched. The resistance line is being touched on a regular basis, which you want to see in a healthy uptrend. So all of that looks good in the longer term picture. But when we scroll into more recent action, we begin to see a few troubling signs. We saw this push a few weeks ago to open up at new all-time highs, and that got sold off very quickly. And that was kind of a bit of a pullback in the market on the fear that the Fed is going to be raising interest rates sooner rather than later. And we're also looking here on the far right edge at a potential lower high, which gives us then the likelihood, or at least the potential, of a change in trend, which would look something like that. Not exactly, but we might be working on a new downtrend here. But there's no guarantee of that. As I see this going forward, what we'll probably see is some more selling pressure over the next few weeks as price pulls back into testing either this low pivot here around 180, 150 in the spiders, or all the way down to 180, which would be about 1800 in the S&P 500 itself. If this pivot high here, this lower high at around 188.40, is surpassed, that is to say price closes above that area, then this downtrend is violated, and it was not a downtrend at all. It was something else, just a little consolidation pattern, and we should then see higher prices above that. But as long as we stay within these two lines, the general bias going forward will be bearish. This is confirmed a bit by some of the volume action that we see down here. We see over several weeks, from the middle of March through the middle of April, your tallest bars were red bars or bearish bars, selling pressure much higher on those days than the buying pressure was during these green bars. We can also see this relief rally here, which took the spiders from a low of around 181 to a high of 188.50, was on lowered volume, and that's not the kind of thing you want to see if you're expecting a breakout to new highs. So all those things considered tells us that we may well be in the market here for a bit of selling pressure over the next few weeks. It may go as low as 1800 in this S&P 500, and then all bets are off at that point whether the long-term uptrend can be sustained. All right, so let's talk a little bit about trading momentum stocks. Momentum stocks are those rocket stocks that shoot up in price very quickly and can make you a lot of profit in a very short period of time. But if you don't know what you're doing, they can also ruin your account. And one of the things I wanted to demonstrate here is to show you that trading the price momentum itself and by itself is not enough. A profitable, sustainable momentum trading system is one that goes beyond merely momentum and price. Let me show you what I mean. I put together a very simple scan that looked for stocks that were trading over $10 per share, an average volume over 100,000 shares. I took the top 30 of those stocks on the basis of how well they performed over the past 24 weeks. And then of those 30, I took the top 10 based on their price performance over the last 12 weeks, roughly the last quarter. And I took the top 3 of those that showed the best price increase over the last month. Now, if you put those into a scan and you trade only those top 3 stocks every 2 weeks, and if the stocks remain in your scan, you hold on to them, and if they drop off the scan, you sell them and you replace them with new stocks from the scan. This is the result that I got after a 5-year backtest using a 2-week rebalance period. The red line up here represents the S&P 500, which, as you know, in the last 5 years has had a pretty good run. This is the system, the momentum system. It lost over 70% in the last 5 years. So clearly trading price momentum is not enough. It's not enough just to chase the rocket stocks. You've got to add some more forms of momentum. And this is what I discovered in my research. I discovered there are 4 essential forms of momentum. There's price momentum, especially in multiple time frames, as we just saw from the last scan. There's momentum in the growth of earnings per share, which is a fundamental factor. There's momentum in the growth of sales over time. And there's also momentum in analyst expectations. And my research shows me, based on years and years of backtesting and real-time trading as well, that these 4 forms of momentum need to be in your scan if you're going to build a profitable, sustainable trading system on the basis of momentum. So you want to see all 4 of those in place. Now, if all 4 of those in place, if they're all in place, you have yourself, I think, and I could be wrong, but I think this is the most profitable trading system ever. I'm going to put it out there because the numbers I'm getting in my testing have been phenomenal. Let me show you what I mean. So for 5 years, from 2002 to 2007, U.S. stocks were in a modestly bullish market. The S&P gained about 106%, pretty good. The top 3 stocks from the momentum trading system that I just talked about, that I put together, gained 1,640% over that same period of time. That's 16 times the S&P 500's gain. That's huge alpha. Now, here's a scan to show you that while there were some drawdowns among the weeks that this system was traded, you have a pretty flat curve. This kind of increasing curve in percentage is what you want to see in a very healthy, sustainable, profitable trend. Keep in mind that there was also, in the midst of all this, a very severe market crash, 2007, 2009. And how did our system perform during that time? Well, that bear market, which I just talked about, which was one of the worst in history, saw the S&P 500 plunge about 36%. Our top 3 momentum stocks, however, actually gained 43%. Here's what that looks like. So here's we have those 2 years rather, of the market crash, late 2007 to early 2009. And our top 3 momentum stocks were, during that whole period, largely in profit territory, even gaining toward the end. Then, as you know, for the 5 years since the crash, stocks have rallied very sharply. The S&P is up about 172% over that period. Our top 3 momentum stocks, however, gained an astounding 15,402%. If you put together those 3 periods, here's our last 5-year record of our top 3 momentum stocks. Now keep in mind, these are the stocks that not only show price momentum, they also show earnings per share, they show sales momentum, and they show earnings analyst estimate momentum. So these are strong stocks, not only technically, but fundamentally as well. If you put those 3 periods together, the 2002 to 2007 bull market, 2007 to 2009 crash, 2009 to 2014 bull run, strong bull run, you have an average gain per year of about 80%, which is it's just phenomenal. I mean, it's just off the charts phenomenal. So this is the cool thing. I also went on to develop a shorting system. I just reversed some of those parameters and identified the 3 best momentum stocks to sell short. And over the past 7 years, as you know, including the bear market that we talked about, the S&P has risen over 52%. But our short selling system, which includes the 5 years of the strong bull market that we just talked about, returned over 460%, only selling short, which is amazing. Here's the chart for the 7 years going back to 2007 through 2014. It includes here's how it performed during the crash of the S&P 500. You can see a sharp rally there. But this is all periods of strong bullish movement in the S&P 500, and our shorting system is making money. So my goodness, we have here one of the best all-around trading systems ever. And what I've done is I've put all that into a new advisory service called the Momentum Letter. It's published each Sunday night on our site, drstoxx.com, and each letter contains the top 3 aggressive momentum longs, and the returns that you just saw come from this particular system on the long side. I'm also going to give you the top 3 conservative momentum longs, so if you prefer to trade more well-known names, higher familiarity names, and names that have perhaps a lower volatility, then you could trade these 3 conservative momentum longs. The system works very well. It just trades a smaller universe of stocks, those that tend to be in the S&P 500. And then also I'm going to give you the top 3 aggressive momentum shorts. So you could put together some pair trades here with a long and short pair, either aggressive or conservative, paired up with the shorts for a nice market neutral portfolio of stocks. It's just I just love this service. I'm trading it myself, and so far so good. So just to quickly let you know how you can sign up for it, every current subscriber is already already has access to the Momentum Letter. If you're not a subscriber, you can sign up today for any one of our 3 letter packages, and you will have free access to the Momentum Letter as long as your subscription is active. I'm only taking 200 new subscribers to this letter so that our trading isn't skewed by too many people going after the same shares. And we have, I think, as of this recording, about 25 spaces available. So it has filled up quite quickly. But of course, there'll be some people that drop out along the way, so you can always try to sign up. To sign up to the Momentum Letter, simply go to drstoxx.com, click the subscribe tab, sign up for any one of our 3-letter subscriptions, monthly, quarterly, or annually. You'll see those rates, I think, are fairly reasonable, and you will have free access to the Momentum Letter as well. So you'll get 4 letters for the price of 3. You're also going to get a free copy of my new trading manual, Momentum Trading, Keys for Building Your Own Momentum Scans. And there I describe the process I used to build the scans that go into this momentum trading system. I don't give you all the parameters. I'm not going to give away the secrets, but you'll have some good guidelines for how you can kind of play around with the scans themselves and build some of your own systems. So thanks for everybody for stopping by, making drstoxx.com one of the top sites for trading guidance and training. And if you have any questions, you can email me, drstoxx@drstoxx.com. And as always, God bless you and happy trading.